Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have been providing North Florida savers and investors sound, comprehensive financial guidance for over 30 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting gulfcoastfinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, 7 years and running, as named by the readers of the Lake City Reporter, serving North Central Florida savers and investors. The team from Gulf Coast Financial Services, 30 years in business, celebrating an anniversary this year, and founder and CEO John Kuykendall here with us, as always, providing that down-to-earth, common-sense guidance with your money so that every dollar can work its hardest to help you achieve your important financial goals. And John, we always appreciate the levity and the information.
Thank you, Peter. It's great to be here. I see you got your short sleeve shirt on, so it's warm where you are. Getting hotter. Summer days are getting a little longer, and we're enjoying life, except for this market. I mean, hey, come on, this thing's gone crazy. We knew it was going to be volatile, right? I mean, the last couple of years have been, and everybody said that 2022 was going to be just as volatile, if not more, but we just weren't expecting the outside influences that we have.
Yeah, and we know that the last decade has been kind of a phenomenal time to be an investor. There have been periods in the past that have been good, but man, the growth that we've seen in the market since the Great Recession, since the bottom in 2009, has really been something that savers and investors in particular have enjoyed. However, John, with all of the growth, we haven't seen many major significant downturns. And then April comes along, the worst month in particular for the NASDAQ since 2008. And we begin to wonder, is this kind of a premonition of what may be to come? Do we need to look at alternatives? If we do, what even are those alternatives? So what do we do when evaluating our choices and options and the risks that we take when we invest money in the market, John?
Well, Peter, the one thing we have said all along on all of our podcasts that we've talked about the market is risk. I mean, there's a certain amount of risk reward. The more risk we take, the more reward we're supposed to get. And that usually happens with the market. But if your risk number, the amount of risk that you're willing to take, is out of sync with your mindset or where you are in life, then we have to adjust that to get it back to where I call it your sleep factor. And I think a lot of people are new to the market. We picked up a lot of new investors since 2009. And I think a lot of those people haven't really seen a prolonged downturn or one as volatile as this has been, where we're sitting about 20% off the NASDAQ, which is a lot. It's in correction. It is in correction. That's a bear market right now for the NASDAQ. Will it be there all year? I don't know. But if you're concerned about it, or if you've gotten where you're worried about it excessively, then you need to talk to your financial advisor and get your risk back in line with where you are. And if you're in retirement, as we know now, Peter, because of the sequence of returns, you can't afford to lose a lot of money if you're living on that growth bucket. You can't afford to lose a lot of that growth bucket in market depreciation. You got to do something and do it quick.
Well, if you are a client of Gulf Coast Financial Services, you already know the number and you've already had the plan assessed, the risk adjusted. And if you are not currently a client but would like to have your accounts reviewed, your risk assessed, quantified, and discuss what, if anything, is in alignment, properly positioned, but what may also be out of alignment, you are welcome to be in touch for a complimentary initial discussion review. evaluation and strategy session. 386-755-9018, the number to call. That's 386-755-9018. John, as you mentioned, we are told we are to take more risk and supposedly we should get more return. And usually that happens. A couple things struck me when you mentioned that. Supposedly and usually. I didn't hear certainty or guarantees in any of that. Sometimes it works out. Over time, it has worked out, but in any given time, we do not have any definition, any certainty that we will make returns for taking that risk.
No, Peter, but the thing I tell all of our clients on the first meeting is that if you take the long-term approach, and if you have a long-term, if you look at that graph of the stock market, it is straight up. But now if we dissect it and take a look at a year, anywhere on that map, it looks like an EKG chart. It's up and down all over the place. You have to expect that. And our clients here at Gulf Coast, we try to explain to them that there are no guarantees that the market's going to make money every year. We can't guarantee them anything. All we guarantee them is that we will watch their portfolios and we will put them in the best funds that we can find. But I can't guarantee that they're going to make a return. I hope they will. I pray they will, because I would like to make one myself. But, there's no guarantees in the stock market.
Well, it's a little scary looking at the charts, and there's a slight variance here, but back to January 1 of 2021, here as we record this program, a year and 4 months of time passed. The S&P only slightly above where it was to begin 2021. The NASDAQ slightly below where it was to begin 2021. It's not just the movement. It's not just the volatility or the potential for losses day to day, but the amount of time that passes during a downturn, John, can be impactful and substantial as well.
Well, that's true, Peter. But if you look at what we did in 2021, we were up 5-6%. So that was a return that we made, even though the market didn't do anything. Because as the market, as we've always said, the things that are hot this year are not going to be the things that are hot next year. So what we have to do is look at sectors. We have to look at growth, value, all those things come into play. And unfortunately, for quite a while now, the bond market has been terrible. And so that hasn't given us that safe haven that we've always said, if the stock market's off, we're going to bonds. That isn't there anymore. And so the bond market has been acting like it was in a bear market for some time.
Well, we need to decide whether or not the market is an appropriate tool. If so, quantify how much we want to invest in the market, and then the proper setup of that allocation. And then, John, we also need to be aware of what alternatives are out there. If we're not going to be in the market with certain dollars, where can we place those? The bank is obviously a very common alternative, but there are other options out there. In fact, there are many other options out there. And you talk to clients about what some of those other options and alternatives to traditional stocks, bonds, or mutual funds might be.
Well, that's right. With interest rates going up, the fixed annuities, which are for 2, 3, 5 years or 10 years, those rates are going up. So they may be a safe haven to put some of the money, because the insurance company guarantees my principal and I get a fixed interest, so I know what I'm going to make. And at the end of the time, I get to roll it over into something else. Also, that interest that I'm earning is tax deferred until I pull it out. So therefore, it may give me a little tax advantage, especially if I've got some capital gains and dividends coming in. So fixed annuities are certainly there. Fixed index annuities, because if the market's down now and my indexes are up next year, I stand a chance to make a little bit of money. So fixed indexed annuities, I get to participate in the upside, a percentage of it, but I don't participate in the downside. Now, that is certainly a way to go. And there are some that are very attractive right now, even some that will give you a fixed rate or the market, whichever is greater over a 5-year period. So I really like those for our more conservative clients and our clients who just need to diversify because don't want to have all their money in the growth bucket.
John, while rates are improving as a result of interest rate environment and the Fed's interest rate direction heading upwards, are these things a reasonable alternative for consideration? Are they going to pay us any kind of fair interest or return?
Well, we've been pushed down. We've had suppressed interest for a long time.
Yeah, I mean decades, it seems like.
Yeah. And people are used to 3% mortgages. Now mortgages are 6.5%. People are beginning to back off of getting loans on real estate or purchasing real estate. But that also affects my consumer loan on my car, my travel van. If I'm going to buy a van, my interest rate's going to cost more. I may not be able to do that. It affects a lot of things, but it is certainly a way that we can invest the money for a short period of time, and we don't have the pressure of having all of my money in the market. And I like our clients to be diversified. And that's the one reason we also try, Peter, to look at that income gap. And if you're retired, I don't want to have to pull a lot of money out of your growth bucket. I want to fix that income bucket so that I've almost break even with some kind of income annuity or some kind of income that's coming in each month, so that I can give my growth bucket a break. And I tell our clients that, hey, look, you may want to go on the trip around the world, but we may not be able to do it in 2022. But if 2023 is a good year, then let's do it. We have to plan and project that out with that income plan. And
if we look at the alternatives on the bank side, if we're drawing out income, the bank interest rate of 0.5% or whatever it may be within that range, but still with rising interest rates, less than 1% is prevailing. If we take any kind of reasonable income out of that, we're probably going to deplete our savings amount, tap into principal. With the market as the alternative, the source is going to fluctuate. We know this with certainty. It may be up, it may be down, it may be sideways, but day to day, that specific amount not guaranteed and is going to change. So taking any kind of stable, reliable income from that source can be a challenge, as you noted there, John. So where we would like some kind of more stability for principal or dependability, durability, and certainty for income, these alternatives within annuities, within the guaranteed lifetime income benefits, may be pretty attractive.
Well, that's right, Peter, because especially if I'm doing my fixed rate annuity or my FIA, I want to stay as short as I can. Because if I'm doing a fixed annuity, I don't want to go longer than 5 years. I may want to do a 3-year. I may want to ladder them so that I have one coming due every year, because as interest rates go up, which they will, then the bank's going to pay more. I'm going to get more on my annuity when it renews, because our rates are going up. So it just makes it that I can maximize my income. I don't want to lock into a 10-year. Now, the other thing is the guy who calls on the phone and says, hey, I can put my money under my mattress and not lose anything. But are you really not losing? You still have that dollar, but what does that dollar purchase next year? With inflation being 7-10% a month, it ain't going to take long before my dollar's not worth anything. And so we have to earn something on our money. We have to do the best job we can to make sure that we're earning as much as we can.
Now, I'm glad you mentioned inflation. That's certainly been the buzzword here the last 6 to 12 months, and we are seeing it day to day in just about everything we purchase. What about I-bonds? These are, as I understand it, nearly risk-free, government-backed, and tied closely with the inflation rate. I believe in May announced at 9.62% on I-bonds. Is this a reasonable consideration?
Well, it is if you have some money that you don't want to tie up, you want to tie up forever. It's a great return, but don't forget those are going to reprice every 6 months?
Okay.
And so I'm not guaranteed that rate for the length of the term. I'm guaranteed that rate for 6 months, and then I'm going to reprice, and it depends on what inflation does. So in the short run, if we have extra money, it's a great way to get some return. But in the long run, I don't want to take all my money and invested in I bonds, thinking that I'm going to get this near 10% return. Peter, I often think back to the days when we had the 10% 10-year annuity, and it was 10% a year for 10 years. And we tried everything we could to get people to put money in that. And the market was doing so good in 2000 that no, they wouldn't do that up until the crash. And by then it was too late because interest rates started coming down. But, if I had that product right now, I could sell all that I could get.
Mm-hmm. Yeah, people would be knocking at your door and phoning around the clock. I think the other downside of the I bonds, John, you can't put too much into them. They're rather limited in the amount that you can invest as well. $10,000 per year, as I understand it.
Yeah, that's right. $10,000 per year. And you got to understand it's liquid, but not that liquid. So I've got to do a little bit of work to get my money. You don't want to, it's not something. Now we can buy some tips, which are indexed. We can get some index funds that are geared towards inflation. There's some other things that we can do, but this isn't where we need to really put a lot of our money. If you got 10 grand, you don't need it. It's a great place to get a good return right now.
Well, many are concerned with the volatility of the market. I feel reasonably so. Long term, the market has not always, or not only always come back, but always surpassed previous highs. It's over the long term, though, and what it does in any given period of time, there is no certainty. We do not know, nor can we predict the future, and that's why, John, many savers and investors look for alternatives from time to time for portions of their life savings, for specific dollars that they want to work with more certainty toward achieving specific goals.
That's right, Peter. And what we need to remember is that over the long haul, the market, as you said, always comes back. It will come back, but it depends on where you are in life, how you approach this market. While it is volatile, there has been days where it's down, days where it's up. We don't know which way it's going. We never did. We never try to time the market. But if you have a longer time horizon, you want to be in the market. If you're getting close to retirement or you're in retirement, we need to be diversified among a much of different investment options and choices so that we can keep your income coming up, but at the same time, we don't want to deplete your savings. And so we're not going to lose a lot in the market, but we may not make as much as we have in the past this year because there just aren't those many opportunities.
Well, and John, you and your team there at Gulf Coast Financial Services, you help your clients and proactive savers and investors understand, evaluate, and select between those available options that are out there.
That's right. That's what we want to do. That's what we do. We want to take a look at where you are, do income planning, tax planning, Social Security planning, and make sure we got everything covered so that we know where you are. And in your stage of life, we're going to make the best recommendation we can to diversify you so that you can sleep at night. That's what matters, is your state of mind. If you're calling your financial advisor constantly worried about the market, then you need to have a meeting and decide where your risk number is. Evidently, you're more risky than you need to be, or you need to understand his philosophy and what he's trying to do. You got to remember too, there are a lot of financial advisors that haven't been in this market before. They've always been in an up market. And so for them, it's been very easy. I mean, I got into banking in 71. So I've lived with hyperinflation. I've lived with high rates. I understand what to do. And I think I have a much better perspective. And even at my age, I'm not willing to get out of the market. I think I have to be in the market to keep up with inflation.
But that is an individual case-by-case decision.
Yes.
Dollar per dollar. You've got to decide which dollars are appropriate for that. And that's exactly what John and his team there at Gulf Coast Financial Services help clients with each and every day. If you would like that forensic financial analysis, the risk assessment, Social Security optimization report, that initial review and strategy session, pick up the phone and give Gulf Coast Financial Services a call, 386-755-9018. That's 386-755-9018. And if the direction of the market has given you a moment's hesitation or concern in your mind, I think it's a great time for you to to address those concerns. And the team from Gulf Coast Financial Services, John and his team there, make that an easy process for you with that initial complimentary review. 386-755-9018, 386-755-9018. John, as we continue watching the market day to day, any closing thoughts for the audience on the program?
Well, Peter, we just need, as I said, we need to make sure that we understand what our risk number is. We need to make sure that our risk tolerance is in line with what we're doing. We've rebalanced our portfolio. We've made a lot of money over the past, 10 years, 15 years. And now we need to rebalance our portfolio because most portfolios are out of sync unless you were the Gulf Coast, because we reallocate annually. But the ones that we need to do is you need to be aware the market will always come back. The United States economy is still strong. Our stocks are still strong. Record earnings are still coming out. It's just that we have all these external factors, the war, the inflation, the oil prices, all those things are causing havoc in a market that we knew was going to be chaotic anyway. And it's been chaotic for the last 3 or 4 or 5 years. If you really think back about it, it's just that we've always been able to overcome it. And we will again.
Well, John, we always appreciate the information, the education, and the reminder of what we need to be doing in order to achieve those important financial goals.
Thank you, Peter. It's great to be here. Hope you have a good weekend. Let's get some sun on those arms, man.
Absolutely. All right. Well, I'll go out and start working on that now, John. In the meantime, ladies and gentlemen, give Gulf Coast Financial Services a call if you do have any questions. 386-755-9018. That's 386-755-9018. John, always appreciate the time. Again, always good to see you.
Thank you, Peter. Great to be here. Have a good week.
Take care.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.